Just giving in the data check there, the fact that gold is gone above $1,300 an ounce. How short-term a trade is this, but how psychological is it as well?
Well, I think it is psychological. There's a real question about the election results, obviously, and also the direction of the Fed. So anytime you have uncertainty in the markets, investors will naturally move towards safe havens. And one of those safe havens is, of course, gold. And there is a lot of investor uncertainty right now. The interest rates are kind of keeping the expectations of interest rates. We do expect the Fed to move in December. So that would be negative for gold. So that's keeping a lid, if you will, on the prices of gold right now.
Why would investors suddenly be looking for a safe haven?
Well, because of the uncertainty, they don't know.
But it's been uncertain since the beginning of the election cycle.
It has, but then you've got the Brexit. We've got several things that are stacking up in favoring gold. And we saw it start to move with the UK Parliament needing to, the courts in the UK saying that the Parliament must approve any Article 50. So that started us out. And investor anxiety, we've seen the VIX increase dramatically. And again, that all goes into safe haven. And we've also seen some safe haven buying of the Japanese yen.
Chris, silver's outperformed gold this year. It's up 32%. Does it continue to outperform its cousin?
Yeah, again, most of that move came in the first half. We saw a dramatic move. All the precious metals outperformed the rest of the market in the first half of this year. I think that gold will actually be the safe haven investor's choice going into the year end. I think that the low interest rates, even if the Fed increases interest rates in December, lower interest rates, there's lower opportunity cost on holding gold, and therefore, if you have an outlook by the Fed that interest rates are going to stay low, which I think they're going to stay accommodative. I think no matter if they raise rates or not, they're not going to come out and say we're going to do another 4 in 2017.
Chris, let's talk oil. Worst week in almost 10 months. We had this report that Saudi's threatening to raise output, and then the OPEC Secretary General said the kingdom didn't make that threat. But the bottom line is prices are at the lowest level since OPEC agreed its deal in Algeria. Is there real doubts that OPEC's going to be able to push through this deal?
Oh, absolutely. I don't think anyone expects them to be able to push through the deal. And again, oil's got, it's a supply demand, and we saw inventories rise to a pretty good jump in inventories here in the U.S. Anytime you see the price jump up and make a substantial move higher, we've got production that can now come online fairly quickly. And then you've got the non-OPEC members also. You've got Russia sitting there ready to ramp up production and needing to ramp up production. And you've got then the shale producers. So I think oil is going to have really face a lot of headwinds going forward. And until global GDP and global growth catches up with production, I think the supply is going to outpace demand, and therefore prices are going to remain subdued.
Below $40 a barrel again? I
think it can. It's a push-pull. I mean, you get prices too low, and then some of that production comes off the markets. And OPEC, there's more of a need for OPEC to agree. So they may come out and try to jawbone the price back up. So I think between 60 and 40 is kind of the range we stick in, and I don't think we're going to see it move too much out of that range.